Hello guys, my name is Cpa Edwin Ochoy. I teach at the RCM Westerns, whereby we provide CPA and CASNEP courses, that is the CPA itself, and also the NEC courses. So now for today, I'm going to tackle Ifrs 5, that is the discontinued operations and the advanced financial reporting. So what concerns the Ifrs 5, that is the discontinued operations. So here you will find that there is subsidiaries which are disposed. So the subsidiaries which are disposed, so whereby the parent disposes the relevant subsidiary, either entire or partial. So once a subsidiary is disposed entirely, so that subsidiary qualifies to be a discontinued operation. Then even a subsidiary is disposed by the parent partially, so that subsidiary qualifies to be an asset held for sale. So you have to know that once there is a discontinued operation is whereby the subsidiary is disposed entirely during the year. But if it's disposed entirely at the end of the year, so both the investee companies qualifies to be continuing. So when there is a discontinued operation, always now, as the parent, you are supposed to prepare two income statements. That is the first one for the continuing operations and another one for the discontinued operations. With the main concern whereby you have to check for the disposal of the subsidiary in order to get a gain or a loss. To get a gain or a loss, if it's a gain, it's an income. If it's a loss, it's an expense. So we can take a question of December 2017, that is under the advanced financial reporting paper. So let us check on that question. That is the December 2017. So the question reads, the following statement of comprehensive income relates to W Limited and its investee companies S Limited and F Limited for the year ended at 1st March 2017. So we have the relevant income statement. Then, so the relevant income statement you are given on that scenario. Then you have the additional information there. So under the additional information they are saying, W Limited bought 60% holding in the equity shares of S on 1st April 2016. The purchase consideration was agreed at shillings 900 million, of which 600 million was paid in cash. The balance was satisfied by immediate issue of a 5% bond at par. Then S Limited net assets had a fair value of shillings 1400 million as at 1st April 2016, represented by equity share capital of shillings 775 million and retained earnings of shillings 625 million. It was decided to apply the proportion of net asset method to calculate goodwill on acquisition. No impairment loss on goodwill arose during the year ended at 1st March 2017. So in short, in that additional information number 1, it's only that you have been told there was a W which bought 60% of S. So 60% of S, which means that S is a subsidiary. So you are given the purchase consideration, which is 900, whereby 600 was paid in cash, then the balance, that is 300, was paid through the issue of a bond, 5% bond. Then you are given the relevant net assets, that is the equity share capital and retained earnings. Additional information number 2, W Limited sold its entire 60% equity holding in S Limited on 31st March 2017 for shillings 1150 in cash. No entry has been made to reflect this transaction. So that is all about when they disposed the S. So here you could find that S, which is a subsidiary, was disposed entirely on 31st March 2017. So in that scenario, I will check either if they got a gain or a loss on disposal of that relevant subsidiary. The next, W owned 90% of the equity shares of F Limited since incorporation. No goodwill arose on this acquisition. Then there was no retained earnings in existence as at the acquisition date. So that is all about F Limited, which was also acquired. The next they say, during the year ended 31st March 2017, W sold goods to F Limited for 15 million. These goods were sold by W Limited at a markup of 50% on cost. 3/5 of these goods remained in the inventory of F Limited as at 31st March 2017. An amount of 4.3 million remained outstanding to W Limited in respect of these goods as at 31st March 2017. So on that case, here you are supposed to check for the unrealized profit on stock because W sold some goods to F. But at the end of the year, remember that W sold the goods to F at a profit. That is a profit of 50%. They have said a markup of 50%. So you will check for the unrealized profit because now at the end, F never resold all of the goods received from W because 3/5 of these goods remained in the inventory of F. 5. On 1st March 2017, F declared interim dividends of 9 million. W has recorded its share of these dividends as income. No other dividends were declared by the group companies during the year ended at 1st March 2017. The next, here you have all expenses and gains are assumed to accrue evenly throughout the year. No new equity capital was issued by any group company during the year ended at 1st March 2017. Interest on the 5% bond was payable in arrears. No payment has been made or provided for. So they need what? Gain or loss on disposal of the shares in S and also to compute the statement of comprehensive income for the year ended at 1st March 2017. So that is a 14 marks. So let us start from the gain stroke loss on disposal of S Limited. So on that case, you are supposed to start from the sales proceeds. So you check on the sales proceeds. You raise the share of net assets disposed. Then next you subtract unimpaired goodwill. Unimpaired goodwill disposed. The next you are supposed to subtract dividend, the dividend earned and disposed. Dividend earned and disposed. So this is whereby I'm checking for the gain stroke loss on disposal. So the sales proceeds, according to addition information number 2, you are given there 1150. So on the case of the net assets disposed, on the case of the net assets disposed, on the net assets disposed, remember in the addition information number 1, there they provided net assets of 1400, whereby it comprised of the equity share capital, that is according to addition information number 1. So the equity share capital was 775, then the retained earnings, so the retained earnings, so the retained earnings was, so the retained earnings on this case we are supposed to use as disposal date, Remember that on this scenario, remember that our financial year ends on 31st March 2017, and that is the time when S was disposed. So the financial year starts on 1st April 2016. So the retained earnings you are given in the first additional information is on the 1st April 2016, which is 625. So we are supposed to add profit for the year, so that we can get these retained earnings as disposal date. So the profits for the year from the income statement, so under the column of S, we have the total comprehensive income for the year of 102. So if you take 625, you are supposed to add 102. So I use my calc very clear here. I will say 625 I add 102. So here I'm getting the 727. So the 727. So if I take 727 plus 775, that is 1502. But remember that out of that, the parent controlled 60% of that, but 100% was disposed. So 60% of that, I'm getting 901.2. So this is the one I'm supposed to subtract here. Then what about the unimpaired goodwill disposed? So on this scenario, I will do a next working. So working on goodwill. So working on goodwill, again, under that addition information number 1, you are told to use the proportion of net asset method to calculate goodwill, which means I'm supposed to use the full method so that you know that the full method, goodwill is attributable. Goodwill is attributable to the parent and the non-controlling interest. So on this case, I will start with the purchase consideration. Purchase consideration. So the purchase consideration on that scenario was 900. Remember that W paid 900 to acquire S. Then now the fair value of NCI. So the fair value of NCI, on that case, the fair value of NCI. So we were told to use the proportion of net assets. So remember the NCI is 40% because S was controlled up to 60%. So the non-controlling interest is 40%. You multiply the net assets. So proportion of net asset method. So that is 1400. I multiply with 0.4. I'm getting 560. So we subtract the net assets acquired. So net assets, you were told that they were 1400. So net assets. So here I'm supposed to say 60% of that 1400. That is according to addition information number 1, and the 40% of that 1400. So 0.6 times 1400. So that is 840. Then on the other side, 0.4, I multiply with 1400, that is 560. So if I subtract, this is 0, then this one is 60. So if I add the 2, remember this is goodwill, so I'm supposed to get a total goodwill. So I get the total goodwill of 60. So remember out of that, I will check if there was impairment. But the last part of the additional information number 1, under that last part of additional information number 1, they said that no impairment loss on goodwill arose. So it means that there was no impairment. So the net goodwill on this case, so net goodwill, which is unimpaired, is that 60. So I'm supposed to subtract 60 on this case. So according to the last part of that, that is dividend earned and disposed. So the dividend earned and disposed. So on addition information number 5, the only investee company which paid dividends to the parent is F. S never declared any dividends. So on that case, if I take my 1150, I subtract 901.2, I subtract 60, then again, so that is if I take 1150 minus 901.2 minus 60, I'm supposed to get 188.8. So that is again. Then the second part of that question, you were supposed to do the consolidated income statement. So the consolidated income statement in the shortest time possible. So in the shortest time possible. On this scenario, I will talk about the income statement, the consolidated one. So the income statement. I'm supposed to start from the revenue. So revenue, I will take the parent, 976. You are supposed to add the subsidiary, that is 420. Because on this scenario, I can explain something here. Because on this scenario, remember that, before even I continue, remember that W acquired S and F. W acquired S and F. And our financial year was ending on, our financial year was ending on 31st March 2017. So it was starting on 1st April 2016, and the S was disposed on the end of the financial year. So if S was disposed at the end of the financial year, so we cannot say that S is discontinued. No, S is a continuing operation. That's why I'm doing the normal income statement, a normal consolidation without the case of discontinued. Discontinued comes in when the subsidiary is disposed during the year, but not at the end of the financial year. So here we are supposed to add the 976 plus 420 plus 63. Then I'm supposed to subtract intergroup sales according to additional information number 4, that is 15. Because now there, W sold goods to F for 15. Then the next thing I subtract the cost of sales. So the cost of sales, here is not about 687. I will add 228. I will add 26.2. Then I subtract 15. Then I'm supposed to add UPS. So because on this case, UPS is all about, there was an intergroup sales of 15 years according to additional information number 4. But now F received these goods, yes, but he only sold part of the goods because 3/5 of these goods remained in the inventory of F. So to get the unrealized profit on stock, I will just take the 3/5. So 3/5, I will just take the 3/5. I multiply with the 15 times profit margin. So on this case, markup is 50%, that is a half. So margin, I'm supposed to add 1 so that it's a third. So if I say 3/5 times 15 times a third, that is like 45 divided by 15. So I'm getting 3. So here is 3. So the next thing you are supposed maybe to subtract is either UPS on opening stock, then I'm supposed to add depreciation undercharge, which is not present because depreciation undercharge is due to revaluation, and also I subtract depreciation overcharge due to sale of fixed asset, which is not again present. Then after that, once you take revenue minus cost of sales, you are supposed to get the gross profit. You are supposed to arrive at the gross profit there. Then the next thing is all about dividend received. So dividend received. So before the dividend received, I can see that we have other income. So other income was direct because you were told is 6.1. Then the dividend received is 8.1. I'm supposed to subtract what the subsidiary, that is F, declared, because according to additional information number 5, they say that F declared interim dividend of 9. F declared an interim dividend of 9. And we know that the investee companies are not supposed to declare any dividends to the parent company during the year because the parent is entitled to the final profit. So here I'm supposed to subtract the 90% of the dividends which were declared. So that is supposed to be nil. Then the next thing I will talk about is the operating expense. So on that case, the operating expense is 68. I add 54. I'm supposed to add 13.4. Then the next thing is all about introducing impairment. But the question, they say that there was no impairment because according to additional information number 1, towards the end, there they say that no impairment loss on goodwill. No impairment loss on goodwill. So that is not present. So that here we have the profit before interest and the tax. So that I can minus the finance cost. So the finance cost on that case is all about 12 plus 18 plus 6.2. The next I'm supposed to bring in the gain on disposal of S because it's an income. So the gain of 188.8. So here the gain of 188.8. Up to that point, I have the profit before tax. So after that, I will subtract the income tax. So the income tax on that case, income tax was 45. I'm supposed to add 45. I'm supposed to add 30. Then I'm supposed to add 3.2. I'm supposed to add 3.2 so that we have the profit after tax. So after the profit after tax, there is other incomes I see there. So add other comprehensive incomes, other comprehensive incomes. So other comprehensive incomes. So other comprehensive incomes. So on this case, other comprehensive incomes, we have only revaluation. I have only the revaluation. So the only revaluation there is all about 15. I'm supposed to add the 60% of 12. I'm supposed to add 90% of 2. So up to that point, I can say we have the total comprehensive income. We have the total comprehensive income. So the total comprehensive income, so that now we can get the relevant figures. 976 plus 420 plus 63 minus 15. So here I'm saying 976 plus 420 plus 63 plus 63. Then I'm supposed to subtract 15. So I'm getting 1444. So the 1444. Then I subtract cost of sales. Cost of sales is 687 plus 228 plus 26.2 minus 15 plus 3. So that is 929.2. So if I subtract, I would say 1444 minus answer. That is here, you are supposed to get 514.8. So if I add 6.1, I'm going to get, so because here there's something before I add that one, so 68 plus 54 plus 13.4. So this one is 135.4. So this one is supposed to be subtracted. So I would say 514.8 plus 6.1 minus 135.4. So that is 385.5. So the next thing, here I have a 12 plus 18 plus 6.2. So this is a 36.2. So I'm supposed to subtract that. Then I will say 385.5 minus answer plus 188.8. So here we have the 538.1. Then now there I will say 45 plus 30 plus 3.2. So this is 78.2. So this one is supposed to be subtracted. So that is 538.1 minus answer. That is 459. So this one is 459.9. If I do the rest, that is the revaluation. I will take 15 plus, that is 0.6 times 12. Then I will add 0.9 times 2. 0.9 times 2, I'm getting 24. So if I add 459.9 plus 24, I'm getting 483. So 483.9. The only part which is remaining is all about the profit which will be attributable. The profit which will be attributable to the non-controlling interest and the profit which is attributable to the NCI. So this is how you are supposed to do the question concerning the discontinued operation. But this question was all about they disposed this subsidiary at the end of the financial year. So if they dispose this subsidiary at the end of the financial year, then now everything remains the same, whereby all the investee companies are continuing operations. So on my next video, expect I will do a question whereby you will be able to do the two income statements. That is probably a question of 2011. So at the RCM Westerns, we provide professional materials and standard classes of CPA and NEC courses. So you are welcome, and if you are free to interact on my platform, that is on YouTube, that is Edwin Ochoi, and my social platforms on the same name. So you have a nice day.